All right. Some previous videos I shared talked about is your balance sheet, your net worth. You got some checking accounts, some investment accounts, maybe a business, maybe real estate, maybe invest in some restaurants, oil and gas, etc. That's your balance sheet. Maybe it's cryptocurrency, Bitcoin, etc. Now we're going to talk about how do we create some income. So you've got these assets, but you got to pay for a lifestyle. Not only now, but in the future. So this is our how to create a paycheck in retirement. So let's say you've got $1.8 million of investable assets. Let's just say it's in a bunch of IRAs, trusts, etc. We're not going to worry about the registrations right now. I'm just going to show you the concept of creating income. So your annual income needs are $350,000. You're getting business income from a business. You also might have an IRA RMD that you have to take. This one happens to be an inherited RMD. And you're going to be getting Social Security. So these amounts subtracted from your annual income needs leaves an additional $65,000 that we need to create to pay for your lifestyle. First thing we do with your fiscal house, we set up a solid foundation. Protected money. We're going to put about $400,000. That's 1 to 2 years of cash in some kind of checking account, saving accounts, money market funds. This money needs to be easily accessible for safety, immediate liquidity, and also emergency. So if your roof leaks, transmission breaks, you got money that's accessible. It's also investment opportunities. A lot of our clients, they want to buy a vacation rental or another piece of a business, etc. We need to have the money that's accessible. Not have to worry about the stock market going up and down and pulling money out of that. And then the money that's in this account is going to be used to pay for your lifestyle. So that $350,000 annual check is we pulled from these type of accounts. The next step up in your fiscal house is your walls. Insulation, income, and inflation protected. As we've seen the last couple of years, holy cow, inflation's been pretty high, especially out here in Arizona. So we want some money that's going to get some COLAs with it, or it's going to be a little bit higher than what you're going to be paying out in your checking, savings, or money market funds. So this is primarily going to be some bond ladders, maybe annuity ladders. Maybe you've got a pension. Fortunately, right now in our society, only about, I think 19% of it could get a pension. Social Security gets a COLA with it. And then maybe you build out some ladders. And then depending again on your tax bracket and registrations, we help you decide where you want to park these investments. So these assets create about a $40,000 income stream that goes into bucket one. So it goes back into your checking accounts, your savings accounts. We're going to take about $900,000 of the $1.8 million and then park it amongst these. And then that's what we do is help our clients decide which one of these they feel most comfortable with and what we think they should be doing. Next step up is your money at risk. So everybody talks about the stock market. Yeah, you should invest in the stock market. Maybe not. One of the first things we help our clients decide is, should they even be in the stock market? You've got $20 million set in the bank and your lifestyle is $50,000 a year. Well, maybe you don't need to put that money at risk. But if you're looking to get some growth and also maybe get some income that outpaces inflation, then you get to put it at risk, which is growth stocks, dividend stocks, index stock funds, ETF funds, cash value life, real estate. These are all high risk, high reward. As we saw in 2008, holy cow, the stock market bottomed out. So did real estate out here in Arizona. Well, we went through some tough times. So I think that this stuff is always going to appreciate. It's not realistic. So, but this is for money that is 7 or more years down the road. So out of the 1.8 million, we're going to pull $500,000 and put it into either a combination of these, or sometimes what we also do for our clients in retirement is we put them in some high dividend paying stocks. We got some great corporations here in the United States that pay some pretty steady dividends. That's 3%. So then that $50,000 is going to go back into bucket one. Plus, maybe if you want some growth, then hopefully we'll put that into. We could even put it in the straight stocks. So what does a bucket strategy provide? ample ready liquid cash to handle essential living expenses, plus money for travel recreation. So in other words, your lifestyle, not only now, but in the future. Secure, reliable income, contractually guaranteed for life from audited licensed institutions. So this is your annuities, your fixed index annuities. Primarily, not your variable annuities, not your fixed annuities. So again, fixed indexed annuities. Now that people don't have pensions, that industry has stepped up now to provide you or your spouse lifetime income that is guaranteed never to run out. Capital growth, and then optional attention to long-term care funding, optional attention to leaving a larger legacy, and then we also pay close attention to reducing fees, reducing risks, and working to reduce taxes. So if you're interested in getting help with setting up your retirement paycheck, let me know.